We've constantly been hearing one of the top issues for American voters is the economy. And today, Fed Reserve Chair Jerome Powell gave his annual remarks at the Fed's yearly retreat in Jackson Hole, Wyoming. He outlined the current status of the U.S. economy and how the central bank plans to proceed moving forward.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. We will do everything we can to support a strong labor market as we make further progress toward price stability.
CBS News contributor Javier E joins us now to break all of this down for us. So if everybody was watching for these comments, these were some of his strongest comments, sort of the crystal ball. Where would he go? Where won't he? What did he say?
So this is a humdinger of a speech. It was actually stronger. It was way stronger than I thought. He sort of, one analyst described as Powell metamorphosing into this full-blown dove. The time has come. It's almost like that old rock song from Midnight Oil. But basically, he's saying, it's rare the occasion that a central banker actually tells the market what it wants to hear in a very straightforward way. But Powell did that today. He basically put the September rate cuts on the table, and he also hinted at the fact that the balance of risks have tilted away, or ever so slightly away from inflation, and much more toward labor market, a widespread labor market weakness, widespread layoffs, that sort of thing. That's what the Fed does not want. He explicitly said, we don't want any more labor market weakness. It's not a factor in inflation. They would just prefer, and particularly in the light of the data that we got earlier this week, which basically was a revision, a jobs market revision, which took almost 1 million jobs off the board.
Jobs.
Yeah, it just really does seem like the path is clear, and they're acknowledging that price stability is moving in the direction we want it, but the jobs market, their other second mandate, which is full employment, is now softer than they would like it to be.
They've come under some recent criticism that maybe they took too long, that September is too late.
Absolutely.
I'm not expecting that Powell would have gone up there today and said, look, we got it wrong. We should have cut rates earlier. But did he address that at all? Did he allude to that at all?
It implicitly acknowledged, look, by keeping rates higher for longer, the danger was the Fed was flirting ever so closely to committing a policy error, which is rates are just too tight. And they're doing that in the service of creating or correcting a mistake that they made early on, which is, okay, don't worry about inflation. It's transitory. It's going to go away. So now, based on what he said, look, he's making it clear that, the Fed really recognizes that the economy is in a different place. We are far away from the 9% inflation print that we got in 2022. Not quite 2% just yet, but moving in that direction.
The Fed, of course, and Powell, they're always going to say we operate outside the bounds of politics, but we don't live in a world in which things can exist outside of politics anymore. I mean, how do the two kind of coincide? I mean, are there sort of two lines and sometimes they merge?
The twain shall meet. So even though the Fed studiously asserts its monetary independence, it's like, look, we make our decisions based on data. All monetary policy decisions end up being political, and in an election year, it's especially fraught. So, back in 1992, George H.W. Bush famously threw shade on Alan Greenspan because he felt like, you could help me out on the economy by easing a little bit. And anything that happens during an election year is inevitably sort of a reflection on the incumbent. So if you cut, it's almost an admission that the economy is weak, or at least needs some more juice. But if you keep it too tight, it's almost a barrier for businesses and consumers to sort of continue to do what they need to do, which is to grow and spend.
Javier E, always good to see you. Thank you.
Absolutely.